despite the Saudi threat, which was really kind of weird if you think about it, the president, say what you will, whether he was in his right to go ahead and side with the Saudis in this Khashoggi killing. Many in his own party, many Democrats had said, we want to stick them to the wall and not help them in their battle in Yemen that's killed tens of thousands. But the president stood firm and did not want to do that. And what did the Saudis do to return the favor? Well, they talk about cutting oil production that would lift prices. And in what some say is a case of supreme justice, oil is tanking. So it reversed after gain yesterday. So essentially, going south on the same amount that it went north. Let's go to Alan Nuckman, watching this very, very closely. Without getting involved in the politics of it, Alan, I'm wondering what you see for oil right now and where it's going.
Well, we're still sideways. It's been more than 3 weeks now between 50 and 55. So we're right about that midpoint. This week we've given up a couple dollars on a weekly basis. The dollar made some new highs, so that's put the commodities under pressure here, but like you said, there's a lot of politics involved, and that's the beauty of the price discovery process of the markets. It takes all those supply and demand issues and boils it into one thing, the price. There's always price shock potential in crude oil, and there's something out there to give it a push above 55, and then that would make the market, make everybody pay attention to the market once again.
Do you think that what's been rattling the markets in general is oil and this concern of a global slowdown, maybe China with some numbers that aren't strong, France looking like it's contracting, Germany maybe following suit, Italy and all that? That's the bigger worry for the markets, not so much whether we score a deal, but whether we'll do much once we do.
Yeah, the global growth story is the concern, and you're seeing that reflected in oil, obviously. You're talking about the China numbers. We would love to have the numbers that they have out of China on a consistent basis. If you looked at the retail numbers and the industrial production numbers that came out today, they're significantly above ours, maybe a bit of slowing on their part. But what we're missing here from the global growth story is the positive. And the positive is here, looking at the board right above me, short-term interest rates, there's going to be no movement in short-term interest rates from what the markets are telling me for the next 5 years. We're staying exactly the same. I've never seen this before in my trading career where we've seen nothing in the futures markets
what are you
as far as I can see.
You're referring that the markets are already betting that short-term interest rates where they are now, they'll stay for years?
They're just going to stay all the way out till we're looking at September of 2024. It's a flat pricing right across the board. So no rate hikes for the next 5 years. Essentially, is what the markets are telling us. Now, obviously, that can change, but that's going to hopefully relieve a lot of the concerns that people had about higher interest rates. And weirdly enough, we were concerned about high interest rates in March. Then we're concerned about the decline in interest rates over the last couple weeks. So I think we can put that off the table and focus on the global growth story, and I think it's been overdone to the downside. Yes, there's a little bit of a pullback, but the global economies had been strong steam ahead for a long time. They were just taking a little bit of a pause.
All right, so let's look at that a little bit here. If you're right, and the short-term rate environment, and they're making a bet that it kind of stays where we are, which is about half where rates should be, if you argue at this point in the cycle, and they don't do anything to change that, that could be a slowdown or worse environment, right?
Well, that's forecasting not a whole lot of strong growth where they'd be able to raise rates. So you can look at it as a positive or a negative. Right. I tend to look at it the fact that rates are going to be stable, and that's one thing that we haven't had and everybody wants for Christmas here on the floor is certainty. C for certainty. We've had no certainty in 2018. This is such a unique market environment. That's what the markets strive for, is to have some sort of certainty, and there are so many moving parts and moving pieces I've never seen before in my history that maybe a little bit of stability will give us some confidence once again.
You're a very young guy, though, Alan. Your history is like a month. I mean, I'm kidding.
1990. 1990 is when I started.
You old man. Alan, thank you very, very much. It's always a pleasure.
Thank you.
Right, that's an interesting development there. I had not realized that if you go out 5 years, investors are betting with their money that short-term interest rates, let's say 2 years or less, are going to kind of hang around where they are for that long. Now, if you make that assumption, and people are making that assumption and betting with their own money that that's going to happen, then you could weigh it both ways. All right, so we don't have the Federal Reserve interrupting this by, chasing inflation because there's nothing out there. But you can also read that to say, all right, the Federal Reserve has stopped hiking rates because the economy doesn't justify it. You see what I mean by the half full, half empty glass? It's confusing, isn't it? That's the world we live in. More to this.